Fixed income assets, which tend to represent the stable, defensive portion of an investor's portfolio, suffered heavy losses in the past 2 months, especially since the November 8th U.S. presidential elections. Yields rose in the U.S. and Canada, with Canadian broad fixed income benchmark, the FTSE TMX Canada Universe Bond, down close to 2% for the month of November after another 1% loss in October and continued negative course in the first week of December. Many anticipated a risk-off reaction after the unexpected Trump election that would favor bonds, but expectation that the new administration's policies will generate growth and inflation led to rapidly increasing yields and a soaring stock market. Long-term government bonds were hurt the most, while corporate bonds fared better. Within corporates, high-yield bonds had actually a positive November given their low duration or rate sensitivity. Finally, floating rate funds that aim to minimize duration risk were up by 0.8% in the past 2 months. Our Medalist funds within the Canadian fixed income category have outperformed the broad benchmark since the beginning of October to the end of November. A shorter duration and an underweight to government bonds, while overweighting corporate bonds and lower credit quality was a common theme among most of our rated funds that contributed to a better showing these past 2 months. Among them, the silver-rated TD Canadian Core Plus Bond Fund managed to outperform the broad Canadian bond benchmark by half of a percentage point in the past 2 months with a 2.5% loss, while its 2.7% return since the beginning of 2016 to November end beats the benchmark's 2.2%. Again, its shorter duration and exposure to high-yield bonds helped, while its long-term government bond positioning detracted from performance. 2 of our medalists within the similarly struggling global fixed income category signed through for different reasons. The bronze-rated DFA 5-year global fixed income fund was down 1.5% for the past 2 months, while returning 2.2% year-to-date as November end, outperforming its average peer. With this fund, investors are exposed significantly less to interest rate risk while maintaining a pristine credit quality. The gold-rated Lysander-Canso Corporate Value Bond Fund had a positive return in October, while remained flat in November. Year-to-date through November, it has returned 7.3% as management has been prudent by shielding parts of the portfolio from rising rates with the use of floating rate notes, while credit selection and high-yield exposure have also been positive contributors. For Morningstar, it's Achilles Taxidaris.